Welcome to the Financial Forecast, a channel that brings you the latest in economic and market insights. As we peer into the crystal ball of 2024, we turn to the wisdom of Invesco's Chief Global Market Strategist, Christina Hooper, and Head of Investments, Alessio DeLonghi. Their outlook presents a delicate balancing act, controlling inflation on one hand while preventing economic deterioration on the other. They forecast a continuing trend of disinflation, yet warn of potential volatility, the wild card of policy uncertainty. Amid these anticipated challenges, they foresee a recovery trade on the horizon. Their advice to investors? Keep your scales tipped toward credit and equities, maintaining an overweight exposure. But as we inch closer to 2024, another factor comes into play. Rate cuts could potentially commence in the first half of the year. How will this impact the market? Stay tuned to find out. Let's dive into the tech sector. It's not just about shiny gadgets and Silicon Valley drama. We're living in a world where technology is ubiquitous, and its influence on the economy cannot be overstated. Even in the face of rising interest rates, the tech sector is poised to flourish. And why is that? Well, the Federal Reserve is expected to keep its lending rate near zero. Now you might be wondering, what does that mean for me? Let's break it down. For businesses, especially the innovative tech players, this low-rate environment translates to access to cheap money for investment. It's like an open invitation to fuel their growth, to innovate, and to disrupt. But it's not just the tech companies that stand to gain. You, as an investor, are also in a prime position. The same low-rate environment that's boosting tech businesses is also driving investors towards high-paying investments. With returns on traditional investments dwindling, high-paying tech funds are looking more attractive than ever. And one fund you might want to keep your eyes on is the BlackRock Science and Technology Trust, also known as BST. BST isn't just any fund. It's a closed-end fund that targets tech firms with high research and development spending. This means it's focusing on the companies that are at the forefront of innovation, the ones that are shaping the future of technology. And what does BST offer you, the investor? It boasts a high-quality portfolio, a growing dividend yield of 4.6%, and a history of outperforming passive ETFs like the S&P 500 and the NASDAQ. But it's not just about the numbers, it's about the opportunity. It's about being part of the technological revolution that's reshaping our world. And with a fund like BST, you're not just investing in a portfolio of tech companies, you're investing in the future. So, whether you're a seasoned investor or just starting out, don't overlook the tech sector. It's not just about the shiny gadgets and the Silicon Valley drama, it's about growth, innovation, and the potential for impressive returns. Remember, a high-quality portfolio with a growing dividend yield could be your ticket to financial growth. In the world of investments, timing is everything. As we edge closer to 2024, a unique opportunity is unfolding, one that allows savvy investors to lock in high dividend yields. This is reminiscent of the chance to refinance mortgages at low rates we saw in 2020 and 2021. As the economy slows down, the Federal Reserve is anticipated to cut rates. This move is expected to trigger a shift among investors, who are likely to transition from treasuries and dive back into the pool of dividend stocks. The ripple effect of this transition could be significant, and those who act swiftly stand to reap substantial benefits. Particularly noteworthy is the potential of tech stocks, a sector that continues to demonstrate resilience and innovation. Two funds that stand out in this regard are the Unveiling NASDAQ Dynamic Overwrite Fund and the Eaton Vance Tax-Managed Diversified Equity Income Fund. These offer not only higher yields, but also the potential for significant upside, making them attractive options for those seeking to maximize their returns. So, as we navigate the economic currents of the coming months, remember to keep a keen eye on the horizon. Opportunities to lock in big dividends are emerging, and the time to act is now. As the saying goes, make hay while the sun shines. Or in this case, lock in your dividends while you can. From Wall Street to the City of London, the financial world is interconnected. The recent resignation of UK Prime Minister Boris Johnson has set the stage for a new chapter in the UK's economic narrative. The country is grappling with high inflation, a shrinking GDP, and the looming specter of a potential recession. These challenges have left the UK economy in a delicate state, and the expectations for the next Prime Minister are high. Economists are looking toward the future leader to provide greater fiscal support, a move that could breathe new life into the economy. The key question is, who will steer the UK's economic ship through these stormy waters, and how? The uncertainty isn't confined to the UK's shores. the unfolding conflict in Ukraine is casting long shadows over global markets and could potentially impact the UK's investments and export performance. Uncertainty often breeds volatility, and in the world of finance, volatility can be both a risk and an opportunity. Meanwhile, Rishi Sunak, the former finance minister, has been combating the cost of living crisis with various measures, but additional fiscal support is anticipated. It's a waiting game, and the world watches with bated breath. Interestingly, the weak pound may offer a silver lining. For investors with an eye for opportunity, this could be the perfect time to pick up international companies at a discount. But as always, caution is advised. The approval of any fiscal package to help consumers is not guaranteed, and the UK economy may continue to struggle in the interim. Change is the only constant in politics and finance. Keep an eye on the UK as it navigates its economic future. So there you have it, a whirlwind tour of the financial world. We've traversed the landscape of the 2024 investment outlook, untangled the complexities of a thriving tech sector poised for growth despite rising interest rates, and dived into the timely opportunity to lock in high dividend yields. We also took a detour to the UK, exploring its economic future amidst leadership changes and potential fiscal support. In our journey, we've seen that controlling inflation and preventing economic deterioration is a delicate balancing act. In the tech sector, innovation continues to thrive, fueled by cheap money for investment. The low-rate environment is enticing investors seeking higher-paying investments, setting the stage for a potential boom in high-dividend tech stocks. Meanwhile, across the pond in the UK, leadership changes and fiscal support measures are reshaping the economic landscape. Each of these elements forms a piece of a larger puzzle, shaping our global financial future. Keeping an eye on these developments will help you navigate the financial seas with confidence and foresight. Thank you for joining us on this financial journey. Don't forget to subscribe for more insights and updates. Until next time, stay informed and stay ahead.